Hey, what's going on? Welcome back to the channel. My name is Amy Nicholas, and if you're new joining us, feel free to say hello down in the comments below. Glad to have you, and super grateful for y'all who are commenting, liking, subscribing. Some of you are watching the video like once and jumping on board to join the day trading fun journey. So glad you're here. And today's video, I wanted to talk about one of my favorite books called How to Day Trade for a Living by Andrew Aziz. And I think that this book is one of the best, simplest, comprehensive, easy to follow books about day trading. This was revised in 2022, and from watching Andrew's live trading sessions on YouTube under the Bear Bull Traders YouTube channel, I could see some of his strategy to have changed a little bit. It was really cool to see that what I started doing was something that he was already doing, which was trading inverse and leveraged ETFs in order to basically buy more shares of a big name stock that costs like hundreds of dollars. For example, Tesla. Like a month ago, Tesla was in the 300s, and I would trade TSLR or TSLQ, so long or short, and those ETFs are, at the time, well under $50, and it made it easier to kind of jump in on these higher price stocks. So that's kind of the way he trades a lot of the times. He'll also do NVIDIA, going long or short on that. So anyways, I related to him from the YouTube channel more so after I read the book. I didn't know who he was until, I read the book. But anyways, I'm going to go through and share some of the highlights that I've captured on this Kindle app here. And I'm not going to go through all of them because I've got 40 some. But I will share some of the best ones that I feel like is worth pointing out. One of the quotes I have here, he says, "I always advise individuals to budget at least $1,500 for education for their first year. Yes, $1,500 might be a lot of money for 1 week or 1 month of training, but over the course of your lifetime, it is a very manageable investment, even for people who are not financially blessed but are ready to begin trading." I think this is so overlooked. When people get into day trading, they think, I gotta have capital, I gotta have money to trade with, right? And they don't necessarily even consider that they should also have capital to invest into their education. It's one or the other a lot of times. Me personally, I came from an entrepreneurial background, and I was always spending money to learn, towards books, seminars, courses, going out of town for events, going out of state for events, whatever I could do to give myself that extra edge in business and just in general personal development. I was always willing to spend money, and a lot of people don't even think of it, let alone budget for it. So I think that's a really good point. Let's see. Okay, he brought up the point that short selling is important because stock prices usually drop much more quickly than they go up. Have we not seen this in action the last several weeks, right? Fear is a more powerful feeling than greed. Therefore, short sellers, if they trade right, can make astonishing profits while other traders panic and start to sell off. I know I was definitely in this ballpark when I first got into trading and investing last year, and thinking that I would never short. I'm always going to go long, right? I didn't trust it, but I also didn't know about the inverse ETFs yet. And once I kind of learned about that, I was like, wow, that makes it so much easier to short a stock. You don't have to have margin. You don't have to worry on any of that stuff. It's like you're literally going long on the inverse ETF. I'm going long expecting Tesla to go short, like that, right? And I think now more than ever in this market, if you can do short selling properly, you're gonna come out on top, right? The rest of the people are like he said, they're gonna just panic, sell everything, right? Okay, so he actually recommends new traders starting with, sorry, there's a thing in the way here. New traders should start out with trading 100 shares. If their stop loss hits, they really have no excuse about why they couldn't get out. I think he's saying this with thinking, his perspective is a bit skewed, because I've heard him say he's going like 4,000 shares deep on like NVDL, which is the long ETF for NVIDIA. And I believe it's in the $15 to $20 range. Don't quote me. But 100 shares is supposed to seem small. And I kind of disagree with this one, because it's like, if you're just starting out, then either your stop loss is going to have to be ridiculously tight, or just expect to lose money. I think it's just in relation to how he trades. It's just like on a way bigger scale, right? So not necessarily agreeing with that part, but I do like this quote. The job of a good trader is to find recognizable and consistent patterns that you know from the past and then trade them. There are many big moves in the market, and most traders think they should be doing their best to catch and trade every single one of them. I've been guilty of this. This is a mistake. Your job as a trader is to stick to consistent patterns that have earned your trust because of their past performance. How many times have you found yourself chasing a stock or an ETF, or you're trading futures or Forex, and you're catching that tail end of it? Most of the move has already happened. And you still are like, no, I got a little bit. I can still jump into this. I can still have a chance. Yeah, how often does that work out, right? So, good points there. Okay. Oh, so in this book, too, the reason why I said it was revised in 2022 is that he talks about stocks in play, like the watch list for the day. And at this time, he appears to have been trading more low float and staying away from institutional trading. But now I see a completely different trading style that he's doing on YouTube. So I just thought I'd point that out. What we should not do, what a trader must never do, is make excuses. So good. Because it's a simple statement, and you could say, yeah. But I think that it's really important to just take ownership, right? Of everything you do in trading. You did it. You're the one that hit the buy button. You're the one that hit the sell button. You're the one that set a certain stop loss, or set a certain take profit, or decided to get in at X price. The market didn't do anything to you, right? It didn't hit you in the face. Sometimes it feels like it. It didn't tell you buy and then go down. It's all on you. And this is just like a relevant life concept, in my opinion, that you take 100% responsibility for everything. And to make excuses gives your power away to some external force. It's called mysticism. It's basically like saying that I don't have any control. I can't do anything, Now, truth, we don't control what the market does or doesn't do. What we do control are actions. So you have to think that in all cases, in all trades, you took action of some kind. You controlled that, right? Doesn't matter what the outcome was. It just matters that you are responsible for that. Let's see. This is a good point, and kind of more on like not just a day trading, but a swing trading, long-term investment, just something to keep in mind. When a sector is weak, that is not a good time to make a reversal trade. So, you see these kind of false moves sometimes, and then you kind of look over at the other tech stocks. Like I'm going to just keep using Tesla. Kind of look at the other tech stocks, Amazon, Facebook, whatever. Like you see that maybe, say, Tesla's making a projected move up, but these other stocks are all going down. It's been the overall trend. It's a weak sector in the technology department. And you're looking at that like, well, wait, this one's different, this one's different. And you could be wrong, because the overall sector is weak. So I thought that was just, kind of an important thing. I will note that I often hear them say on the Bear Bull Traders live trading that they'll be looking at a specific stock to trade, but they're also monitoring the Qs, QQQ, as well as the SPY, the S&P 500. And it seems very much in correlation that when the Qs are tanking, you can pretty much expect all the major tech stocks are also tanking. So don't try to go against that. Don't think that maybe there's potential for it to go the other way. Go with the flow, right? Okay. What else we got? I thought this was an interesting kind of like personal comment in here, and just like his story about trading on your own. Me personally, I sometimes like to trade just silence, because I don't necessarily want to listen to anybody. I don't watch like live trading every single day. Sometimes I just want to like kind of just focus and try to use my own best judgment in the trades. And sometimes I do like the feeling of like I'm not alone. There's other people out there doing this, other people sitting at their desks, like trying to figure out the markets, and it's not so isolating, And Andrew says, I've tried blocking out social media and trading in a bubble, basically doing my own thing, and it did not work. Draw on the laws of high school survival to guide you. And he's kind of talking too about like stocks in play that day. Like if you see a bunch of traders talking, like YouTube Live or whatever, and they're like, yeah, I'm trading Apple, Nvidia, Palantir, SMCI, whatever. Don't think you're going to be the black sheep and go trade some other thing because there's too many people like doing the same trades. Go with that flow of like, this is where the traders are, and then also the note of it's not so isolating when you are feeling like other people are in the same stock. Or like me personally, I actually put together my watch list in the morning before looking at anything or anybody else's stuff, but based on the trends I see, the movements I see happening in pre-market, and what I like to see, what makes me feel like, oh, yay, is then I go watch the Bear Bull Traders and I'm like, oh, they're trading the same ones that I was looking at, like that's on their list too. So it kind of makes me think I'm on the right track. Get better at this, right? Okay, let's see. This is really important because we're gonna deal with this every day, losing, okay, or most every day. He says, I'm a consistently profitable trader, but I still lose almost every day. That means I must have found a way to be a really good loser. Lose gracefully. Take the losses and walk away, and then come back and look for another trade. If the trade goes against you, exit the trade. Your job, I'm kind of skipping ahead here a little bit. Your job is not to be correct. Your job is to make money. This career is called trading, not predicting. And I think, in the beginning as a newbie trader, like I agree with this statement mostly, other than the part about my job is to make money. Because right now my job is to just execute, follow my rules, Money is the byproduct that you traded and you followed your rules and it went in your favor. But I do like the idea of it's not my job to be correct, because a lot of times I find myself frustrated that I was wrong about a trade because I got out and I missed a move, I got stopped out. And so there's this like element of feeling like, oh, dang it, I'm wrong again, And I think it just comes down to that whole idea of like, be a good loser. You're going to lose more often than you win, at least in the beginning. And to realize that it's not about being correct, Like you really, when all is said and done, of course, you follow your rules, risk management, your strategies. You want to make profit. Like, simple as that, right? The ultimate, like, pillar of a successful trader is a profit. This is the definition at that point. I think right now it's more about, for me, just consistency and proving to myself that I can trust myself. I think that's really a big factor in the beginning, is to be consistent long enough where you can then trust yourself to put more capital in and buy more position size. Because if you can't trust yourself with 10 shares, you shouldn't be buying 50 or 100, right? If you're making mistakes in your risk management at the small level, you're going to do it even bigger on the bigger levels. Just something to think about. Okay, a couple more quotes here. Just a simple statement, and I needed to hear this today, or at least just the idea of patience. If you cannot find a setup with a good profit to loss ratio, then you should move on and keep looking for another trade. Yeah. Okay. He talks about the difference of there's three different traders all placing the exact same trade. They all lose money. However, the way they react to the loss can be the catalyst that determines their eventual trading results. One trader might become discouraged, curse the market, and give up for the day. Another trader might become frustrated and trade more aggressively to recoup his earlier loss and end up losing even more that day. A third trader will take a break from trading, walk out for a few minutes to reassess her emotions, come back to reevaluate her strategy, wait for a clear signal of opportunity, and then place a good trade that brings her even by the end of the day. I hope to be that third trader one day. I feel like I'm somewhere in between the second and third, except that, the first and the third, the one that just leaves. I feel like I'm more likely to just walk away if it feels like this just isn't going my way, and not come back that day, but come back the next day. Just so I don't dig myself into some hole. However, say this third trader hadn't hit their max loss for the day or something, then it makes sense. They come back, they're thinking different. Let's refocus. But me with my small max loss per day, I'm usually like, okay, I'm done, like pretty quickly. Even trying to spread it across 2 trades. So, yeah. Okay, let's see if we can find one more standout quote here. Talking about stocks in play. Okay, this one is kind of like the strategy, what I'm personally trying to do with momentum trading. He says, well, let me go back just a little bit. This was just like an interesting quote, because I was like, oh my gosh, like I can think of some certain trades I did where this is exactly the way it played out. Professional traders aim to enter the trade during quiet times and take their profit during the volatile times. That is the total opposite of how amateurs trade. They jump in and out when stocks begin to run, but grow bored, lose interest when the prices are, shall I say, sleepy. Chasing the stocks is an account killer for beginners. You must wait until the stock finds its high point, and then you must wait for the consolidation. As soon as the price starts breaking up in the consolidation area, you can begin purchasing stocks. Patience truly is a virtue. And I think consolidation either at the top or the bottom in this market. Either way. I know, me personally, I'm watching in the morning sometimes just to see, okay, where is that settle price? Like, where's the kind of like, it's losing steam, right? Because then at that point, the market's sort of taking a breath, figuring things out. The buyers and sellers are kind of like even Steven, and it's like, okay, there's gonna be another move here, but you just gotta kind of wait for that moment. And I think as I get to learn the charts better, me personally, like reading and seeing what's going on, I'll understand this consolidation better. Like, okay, this is the sleepy time. This is the time you get in. I find myself often doing what he exactly said, of jumping in and out when there's a run. It's like, yeah, you're too late. It's already running. You're almost too late for that move right then and there. At least I just don't feel fast enough, to execute that quick sometimes. So anyways, How to Day Trade for a Living by Andrew Aziz. Great book. I hope that he does another update on this, because here we are 3 years later, and like I said, he actually trades differently with the stocks in play and how he picks stocks now versus what's listed in this book. I still think it's valuable information, though, especially if you are the type that trades low float, like similar to Ross Cameron's style, then yeah, that's kind of what he was doing back then. And, now his strategy is different. But at any rate, I think it's a great book to snag. And he's got a bunch of charts in it too, to like make it really obvious of what points he's going over. So anyways, check it out. And I have it listed also in my resources, which you can see in the description, my day trading resources, or it's in the comments pinned at the top. And you can just put your email in there and grab all the resources. I have the book link in there, so you can just quickly find it. But that's pretty much it. I hope you enjoyed the video. I'll see you next time. Take care.